Most traders are just simply pattern traders. 90% of traders will see an order block or a fair value gap and they'll just look to get involved. Some trades play out, some don't, but essentially it is gambling because they're not stacking confluence. They're not stacking different reasons as to why their trades will play out in their favor. So I want to show you exactly how to do this and how to get into high probability trades like this 2.6R that played out perfectly on CAD JPY. And we're going to go into some detail. So let's just take this away and look at purely price action. So we have 12-hour price action, as you can see. And we're swing trading, so we want to trade higher time frame trade ideas. So we want to look at the monthly candle, the 2-week candle, and the weekly candle to actually get into proper trade execution. So let's have a look at what's going on, first and foremost with the monthly candle. So what we can see is that, first and foremost, price has broken below the previous two candle ranges right here and then aggressively shifted structure. So this was a very aggressive price action right here, and we traded straight into the highs of the candles that were first manipulated. So price has already raided the external range liquidity at this low and then traded straight to the highs. Now price starts to move into a downtrend and we see highs being respected and lows being broken through until we get to this level here. So from a monthly perspective, we don't really have a trade yet. We've liquidated both ends of these candles and price could really do two things. It could carry on lower, it could shift and go higher, but at this stage it's very unclear until we get onto the weekly time frame. So now what we see is that in shifting bullish, what we saw is a weekly sell candle and then a weekly buy candle. And if you notice, the candle closed right here. So this weekly candle closed above the close of this bearish weekly candle. So what does that do? That creates a weekly order block. So we can mark that as a weekly order block. Sell to buy. So now price is retracing to potentially mitigate the order block. What we also have is resting liquidity at the low of this previous weekly candle range. So price is targeting the order block and it's also raiding the external range liquidity at the low of its previous candle range. So now we have two reasons why price might want to reject this level and trade higher. And if we bring back the monthly candle, we have already swept this liquidity. So what is the reason for price wanting to go lower? There isn't really a reason. So now we have three reasons why this trade might play out. So now we can look at price action itself. So I'll leave the liquidation, I'll leave the order block, and I'll take away the highs and lows that we marked. And what we see is that price moved aggressively into this low. And in doing so, it left a 12-hour order block. So I'll actually mark this with a complete zone, so it's very obvious. So this was the last buy to sell candle. So if we were to expect lower prices, what we would look to see is respect of this level, and then we go lower. But that is definitely not happening because you see with the close of this candle, we actually close inside this bearish order block. And in doing so, what we do is create inefficiency in price. So aggressive price action, a strong up close candle leaves a new 12-hour order block, which we can now mark. So we have buy to sell, sell to buy. We also have the emergence of a fair value gap as there is inefficiency left in this candle. And I'll just mark that in green so that we can see that this is bullish momentum. So we had down candle, aggressive volume into the market. Candle 3 closes, leaving a gap between candle 1 and candle 3. This is price inefficiency. So now what we can expect to see is that price will look to trade into the inefficiency, maybe the order block, and respect this area. So if it's going to respect this area, we can now think about targets. We've liquidated the low of this candle. So the next draw on liquidity would be the opposing end or the external range liquidity at the opposing end of this weekly candle. So we're sweeping it, we're manipulating below to go higher. We also have a key level and a weekly order block, which gives us the fuel to go higher. So now we can simply place our long from the inefficiency, cover the low or the liquidation itself. I'm just going to cover the low for ease, and then we target the high. And that plays out for a 2.6R trade. So what did we do? We stacked multiple confluence to give us more confidence that our trade will play out. We didn't just see a fair value gap and go long. We saw, first and foremost, the monthly candle made sense. Secondly, we saw a weekly order block being created and the liquidation of a weekly candle's low, as well as a close inside this weekly candle's range. We then saw price action show us that it wanted to go higher by leaving this inefficiency in price. So we just simply execute and we play this back to the highs. That is how to effectively swing trade. You can do this in literally 10 to 15 minutes a day if you just stay consistent. So what is confluence? Confluence in trading means stacking multiple independent confirmations at the same level or setup when higher time frame context, liquidity sweeps, order blocks, structure shifts all align. You have stacked confluence. So confluence is basically stacking the reasons why your trade is going to play out. Most traders take setups based on one factor, order blocks or structure breaks or whatever it might be, and they just get stopped out. Some trades work, some don't, and they don't really know why they're trading or what they're trading towards. Why does this matter? Well, we want to take only the highest probability trades. If we do that, we're going to get more winners and a higher win rate. So how do you apply this? Identify what candle range you're trading and why, stack liquidity sweeps and structure shifts, stack confirmation of either market structure shifts or order flow shifts, and stack the creation of high probability internal range liquidity. And that's exactly what we did here. We confirmed that we had a candle range that we wanted to trade from and towards. We confirmed a sweep of this candle range's low. We stacked the confirmation of an order flow shift, order flow in, order flow out, shown by the creation of this imbalance. And we stacked the creation of a high probability point of internal range liquidity. We had an order block and a fair value gap. We covered both with our stop loss and we traded back to the high. And that is how to use confluence in trading to take high probability trades. My model is that I track and analyze 32 Forex pairs, including gold, silver, and Bitcoin. I'm tracking 12-hour price action in conjunction with weekly, 2-weekly, and monthly closes. And I just wait and execute. Once you get good at this, you can do it in 10 to 15 minutes a day. So if you want to follow along for more swing trading content, please subscribe to the channel and I'll see you on the next one.